Good morning. Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Tim Baker, who's the global head of Refinitiv Labs. We're going to take a look at how AI and alt data have changed the sell-side research landscape. Tim, thanks so much for joining us at Market Site. And you had a long career as an analyst and director of research at UBS. It certainly has evolved. Research has certainly changed. Do the basics still matter?
I think they do. I think, when I was an analyst, it was about building a good model. It was about understanding the fundamentals, what was driving the stock price, what was driving earnings, revenues, and costs. I think those basics are still in place, but the tools that you use to get to that point have radically changed.
And how is alternative research, how does that fit in the model these days? I mean, it really has changed, the content.
Well, look, I think the good analysts have always been looking at channel checking and counting cars in car park, trying to get a read on how a company's doing. I think when I was an analyst, you get a lot of that read from management, and they would give you that feedback. When Reg FD came along, you had to go out and find that data yourself. So you'd join trade bodies, or you would start to buy third-party data that would give you a signal. I think alternative data has been around for a long time, but the source of that data has now changed. So if you're a retail analyst, you might have been going to physical stores, looking at the price of goods on the shelf. Today, you're probably buying point of sale data. You might be buying data from cell phone companies to see what foot traffic looks like. And you might be combining that with satellite data of whether there's cars in the car park. So the importance of primary data is still there, but the sources have radically changed.
Yeah. All right, now artificial intelligence, does that play a role as well?
I think a really big role, because all of that data is in a pretty messy format. So you're taking data from point of sale and you have to clean and scrub it. You have to relate that to specific SKUs of products, for example. If you're counting cars in car parks, or if you're collecting other third-party data, it's probably going to be quite messy, and to tie that back to a company and a security requires a lot of data analytics.
Right.
And the tools to do that work and the skills are those tools that sell-side researchers are having to acquire or get access to.
All right, and to wrap it up here, what are the big changes that you expect in the future?
I think more of the same. I think you'll see a greater diversity of data. I think that the role of a sell-side analyst will be largely the same, but they'll be surrounded by teams and skills to augment that research. To make a differentiated call, you can't just rely on the filings and what you hear from management. You have to be more and more creative going out and collecting that data.
I mean, even though it's more challenging from a technical perspective, it sounds like you're actually democratizing access more so than it would have been when you almost had to pay for play for this kinds of access.
Yeah, I think so. Look, the playing field's somewhat leveled, because under Reg FD, everyone's got access to the same data. But I think the bulge bracket, if you look at what UBS and Goldman, Bank of America, they've set up data science teams to support their research analysts. So it's still the bulge bracket who are going to do best in this space, because they've got the dollars to be able to build those teams.
They sure do. This will be a fun conversation to have 5-10 years from now. Thank you so much, Tim, for joining us at Market Site. And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.